Good afternoon, traders. This video is a review of my December trading and a little bit about the whole year and what I plan to do in the coming new year to continue to improve as a trader. There's a lot of great information here that's going to help me make more money in the new year, and I'm sure will help you as well. First, let's talk about the account. Right now, it's at $505.58. It's a small cash account. There's a lot that goes along with that. I talk about regularly in all of my day trading videos. My buying power right now, you can see, is $525.58, and that's because I deposited this morning $20. And the reason behind that is just to give myself a little bit of pad. I'm playing off of my own trading psychology, and I know based on my own psychology that if this account is around an even $100 mark, that I might be a little less likely to hold to my profit target when I'm in a winning trade. And that's a really bad thing, because if I sell too early on one winning trade and then say the next trade goes against me and I hold all the way to my stop loss, then that loss is going to wipe out my winner. And if I would have held to my profit target, then that one winner would be able to sustain at least two losers. So that's the whole reason behind that. So now let's talk about how this month went. Here's my spreadsheet for December. And I did kind of surprise myself to end the month overall slightly green. I know it's a tiny win, but I had a really bad day the Monday of Christmas. The week of Christmas, that Monday, and I'll talk about that. But first, let's just go through kind of week by week really quick, and I'm just going to give you some highlights and lowlights about what went wrong and what went right, and how I made changes to make things better. So this first week is a little bit funny because that's coming off of a win in November, or a green month in November, and I think I was a little bit complacent. I was taking kind of weaker setups. Trading was kind of easy in November, and then December it got hard, and it basically slapped me in the face. And I ended that week red. And I also had a stock that I was holding long term. It wasn't like a bag holding thing. It was actually an investment that I planned to hold indefinitely. But I decided, you know what, I want to make this account just about day trading and make it easier to show you guys, my true gains and losses, and not be confused with long-term stocks that I was holding. So that's why the account just kind of jumped up all of a sudden here, although I don't reflect that in my P&L at all. But essentially, I sold the stock and the account came up to about $480 something, and then I deposited about $20 or $18 and some change to get the account up to a nice even $500 and start from there. And you can see I also tightened up my trading plan, and that's why I marked out this line here in blue. So after that first week, not only did I deposit a little bit more money and close that long-term investment out, I tightened up my plan and my strategy. So I kind of wanted to separate the following weeks from that first week. And you can see what happened is I essentially went from $500 to about $515 in 2 weeks. Nice, slow and steady, no crazy trades, no high risk trades or anything like that. And that was about a 2% gain overall in the account, which is really good for a cash account. It's much harder to make those gains in a cash account than it is a margin account, because I can only trade with a little less than 50% of my account every day. So things were going great. And then on that Monday of the week of Christmas, that was the day that the UK strand of COVID-19 was announced, which apparently is a more easily spread and infectious version of the COVID-19 disease. And because of that, I guess, there was no volume at 4 a.m. That it was reported on the news, too, that affected the stock market. There was a huge sell-off that day because of the virus. So it's speculative, of course, but it makes sense. It was a very strange day. I've been trading at that time now for about 2 or 3 months, and I've never seen such low volume. Essentially, at 4:30 a.m. that day, the highest volume traded stock was trading with 6,000 shares. And today, which was New Year's Eve, so it should have been kind of a low volume day, I opened up Webull at 4:30 a.m. No intentions of trading. I just wanted to see what the volume was. And at 4:30 a.m., the pre-market list organized by volume, the number one traded stock, which I do think was BNGO, was trading with 1 million shares at 4:30 a.m. So 1 million shares versus 6,000 shares. So from here on out, or from that day on out, I decided that's going to be a red flag for me. And I updated my plan so that I know whenever I see no volume between 4 and 4:30 a.m., I'm just going to take the rest of the day off trading because it's not worth the risk. I took my biggest loss ever. Every single trade that I took that day failed, and it didn't feel like I was doing revenge trading or anything like that. They were fairly decent setups, maybe a little bit overextended, but it wasn't really that bad. So to me, the obvious difference was that there was no volume at 4 a.m. So I'll never take any trades on a day like that again. And just it's important to note that I didn't take any trades in the pre-market around that 4 a.m. I waited till like 8:30 when volume appeared to come back in, but still lost every trade that day. It took a huge loss and basically gave back all the gains. I also have re-implemented the 3 strikes you're out rule, which I used to follow, but at this point in my trading, I was sticking to only allowing 2 trades per session, which I thought that was enough protection. How could I lose every single trade in a whole day if I'm splitting up, 2 trades per session? Well, I did it that day. So that resulted in a huge loss. So right now I'm following the 3 strikes you're out rule, which says if I lose 3 trades in a row, I quit trading for that day. And you can see based on these P&L numbers, that would have been like a $4 or $5 loss for the day. So that would have been much more sustainable. My month would be much greener than it is right now. And I've also implemented a max loss of about $5, or essentially 1% of my account size, which I think is plenty. The gold standard is 2%, but remember that the majority of retail traders and trading educators and gurus and furus that push that number, they're trading with margin accounts. Margin accounts, you're able to trade with so much more capital each day that your ability to make 2% or greater each day is much, much higher than in a margin account. Than in a cash account. You can see that my biggest winning days are right around 1%. So maybe if I'm lucky on average, I might get 0.5% a day or something like that. But I'll never probably be able to average 2 or 3% a day on a cash account. So there's no reason to have a max loss of 2%. So that explains that. And then the other thing that happened is after trading on Monday, I decided to add this little box here, which gave me, kind of a wake-up call. Showed me that, hey, look, I'm making tons of money. Well, relatively, I'm making all of my money in the pre-market. I'm losing money in the intraday and kind of break even in the after hours. So what's going on? I mean, if you're not thinking critically, you might just say, well, maybe just stop trading intraday because you suck trading intraday. But it's a little deeper than that. If I'm able to make money pre-market, why can't I make money intraday? So I looked into that, and it was pretty obvious pretty quickly. I'll show you exactly what's going on. So I'll use BNGO as an example. It's a great example. Let's say, for example, that this thing did well here on this day, or it did do well on this day, right? Whether I traded it or not doesn't really matter. And now the next day it's on the top gainers in the pre-market, right? So I see it, I put it on my watch list. This is something I do every day. So I think it was on my watch list that day. But anyway, it doesn't matter. This is just an example. So let's go to the morning, right, which is right around here. So let's say I took an entry here and then this thing, ran higher. Obviously that's an easy, winning trade. Or maybe I wait for it to break the, this is probably what I would have done is let it establish a pre-market high, pull back, and I may have taken the entry here. I don't know. There's also, a nice opportunity here, but obviously it worked out. That's easy to say hindsight, but there's a reason why it worked out so easily and continued to go higher. Not to say that it always will under these circumstances, but the reason why is because there's no selling pressure from the previous day. Notice that the stock was trading lower that day, so there's no one holding this thing from prices way up here that is seeing, okay, it's finally coming back up towards my entry, let me get out. And that's why this thing is able to continue so much higher. Now, what I used to do, let me show you. Now, so that's what I do in the pre-market, and then this thing continues to run because then it breaks the pre-market high. But what I used to do intraday, and this is what hurt me so much, is that let's say I took a trade on something like this in the pre-market, whether I made money or not doesn't really matter. But I mark out the high a day, and then if I'm watching this thing during the day, I might take a trade after it establishes a high of day. Like let's say over here, it establishes the high of day right out there on that first candle. And then I wait for it to come back up to the high of day and pull back, take a trade. And maybe I would have made a little money there. I don't know. That's not a very good run. And then you see it fails and it sells off, it doesn't continue higher. And the reason for that is very obvious. And it just continued to sell off. It's doing terribly today. The reason why is because there's tons of selling pressure from back here. There's people that bought this thing in the pre-market and are still holding it. They were hoping that this thing would break, out through the pre-market highs. It didn't do that, so they're just waiting for any opportunity to get out. So that is the big change that I made in my intraday trading plan. And I wrote it right here in the plan. Intraday market open, never trade if the price is below the high of the pre-market. That's why I was losing so much money before. That's why I'm red here. And I actually started doing that on this Tuesday, and my trading immediately improved. Even this one that was break even here, it was actually, I kind of actually picked a good entry that did go to 2R. I just was a little bit trading with fear because of I was doing so poorly in the intraday before. So as soon as I got in this thing, it chopped around a lot. It never came near my stop, so I was supposed to stay in it and hold until 2R. But it chopped around so much that I ended up, selling for a little bit of profit. Then it came back down and I sold more and back and forth and ended up break even on the trade. And this thing did go to 2R, so it would have been a winner. Then the CTRM trade, this one was essentially a break-even trade as well, but that one, the chart didn't form properly. I have all this on video, so if you want to check it out for proof, you can go to that video on YouTube with the CTRM trade from a few days ago. You'll see exactly what I'm talking about. I got kind of tricked into that trade because the chart didn't form properly, so I got out for basically break-even as soon as I was able to. And then this trade on BNGO was really not a setup that I was supposed to take, so that's why it's marked in yellow. But it was a very low risk trade. I took 1R loss, not a big deal there. And then IPDN, this was the best trade, but unfortunately I was still in this trade when I took this one, so I wasn't able to play it quite properly. And still had a nice return on it, but I screwed up some things in that trade, and I accidentally hit my hotkey to buy and doubled down again. And so you check the video out for details on that. But essentially my intraday trading was already improving after changing that, because I was down about $7 or $8, and I made some of that back before the end of the month. So going forward, that's going to be my new strategy for trading intraday. I even wrote a little note here about why I lost intraday. And then the overall P&L for the month, like I said, is slightly green, but I also did some adjusting just to see, okay, like if I just include from the blue line down, which is meaningful because I made some serious changes in my plan and strategy from that point on. This would be my P&L. If I did that same exact thing and then remove that crazy day, which I should never be in trades like that again, because whenever I see no volume from that 4 a.m. to 4:30, I'm just going to take the day off. And if I would have known about that then, my P&L would actually be $18.81, which is essentially a 2.5% gain on the account, which is very good for a cash account. If you can do that in 1 month, or on average every month, then you're going to be up about 30% every year. And for a cash account, that's very good. Keep in mind, in the bank, you're lucky to get 1 or 2% a year. So anyway, that is my whole month in review. And the year in review, this whole year, I started trading back in April. This is essentially all learning up to this point and all kind of tightening up my strategy and my plan. Not so much about making money, just about finding out what works, what doesn't work, and try to develop good discipline, a good plan, good strategy, a good set of rules, and then the ability to follow those rules. So the new year, this is where I'm really going to be putting everything to the test that I've learned and try to start making consistent profit. Not big numbers, not doubling the account every month or YOLO trading or anything crazy like that, but just steady, consistent profit. The goal just to be green at the end of every month. I'm not going to be trying to have some kind of crazy 80 to 90% win rate. That's not sustainable. If you do that, you're probably exiting your winners way too early because you're trying to force a high win rate. My strategy, which is a much more established strategy by really good professional retail traders that have been, trading as career traders for 20 years or more, all it requires is about a 50% win rate. That's it. Because your winners are going to be much better than your losers, and the overall you're going to be, essentially a 2-to-1 ratio at the end of the month. So you can win half your trades and still be very green at the end of every month. That's much more sustainable than trying to have a high win rate where you're taking very quick profits and leaving lots of money on the table, and then when the trades go against you, you take big losses. It's very hard to stay green overall with high win rate trading. So that's it for me. That's it for the year. I want to thank you guys for tagging along and watching me on this trading journey of mine. And thank you to all the subs. I was hoping to end the year with 300 subs, and we're up to, I think, 325 right now. So I really appreciate that. I really enjoy the back and forth commentary, the discussion that happens in the comment section. And it's really great to hear from all you guys. So please keep that up, even if you just want to say hello. Thanks for what I'm trying to help you guys with me. Or if you want to just say, hey, you suck, this is terrible. I don't really care. Either way, just be nice to hear from you guys. So take care, and I hope everyone has a happy and healthy new year, and I will see you next year.